Hey, this is Alex from Aplos, and today I'm going to talk to you a little bit about how QuickBooks differs from Aplos, and namely in the realm of fund accounting. So you've probably heard us at some point say that Aplos does fund accounting and QuickBooks does not. And that is a true statement, but what does that really mean? Why doesn't QuickBooks do fund accounting? And for those of you who think that it does, why do you think that? They're all great questions. This is going to be a little bit of a breakdown of how basically these two systems differ in the realm of fund accounting. So QuickBooks, what they do is they do standard business accounting. And in fund accounting, which is common for nonprofits, churches, government entities, you need to do what's called fund accounting, which requires you to have a separate equity account, otherwise called a net assets, set up for each of the funds that you need to keep track of. And a fund needs to have its own income, its own expense, also its own equity, but also its own assets and its own liabilities. It is in and of itself it's almost like its own little mini organization within your larger total of your organization. So again, it needs its own income statement, its own balance sheet. It needs to be its own kind of living and breathing thing. And that's where QuickBooks can't really do that. So in lack of that, what people have done, people that use QuickBooks, is they've come up with workarounds that are typically employed to compensate for the lack of true fund accounting. And because it doesn't have fund accounting, usually what you need to create a workaround for is getting a cash balance for each one of your funds, an income statement for each one of your funds, and a balance sheet for each one of your funds. Okay, so cash balance, income statement, balance sheet. So for the cash balance, usually the workaround that people do for this is they'll set up sub-accounts to be basically the different kind of assets that they need to track for each separate fund's cash balance. Now, here's how that kind of looks. So you've typically got a checking asset account to track your checking account at the bank, right? But if you need to know that my checking account has general money and grant money, then that's where it becomes a little bit tricky. So in QuickBooks, what you'd do is you'd set up a checking account with two sub-accounts, one for general money and one for grant money. The benefit of this is it keeps the money separate. So when you want to track grant money, you go into the grant asset account and you track the ins and outs of it, and same with the general money. The downside is it's not an accurate picture of how much cash you actually have on hand, because what happens if you have grant money in both a checking account and a savings account? And that's possible. Now you need to have two sets of sub-accounts created and know that they both kind of are the same balance but two different accounts. So that's kind of one downside to that. It's also normally when people do this workaround, they also might actually create separate accounts at the banks themselves. So not only do you have a more complex accounting structure, you also at the bank now have a bunch of accounts set up that you don't really need because you're trying to get to where you have a separate cash balance for each thing. So in order to ensure that that happens, you've created multiple bank accounts and actually physically kept the money separate, which works. But again, it's a workaround and it's kind of clunky. Another downside of this is it makes your bank reconciliations kind of a nightmare, because now when you're having to reconcile the checking account, now you actually have to do a combo reconciliation between these two sub-accounts that you've created. And that's only if you have two sub-accounts. Not to mention if you've got 10 to 15 funds happening, that's a lot of sub-accounts to consolidate and reconcile together. And again, at the end of the day, all this solves is just your cash balance, and that's it. So it doesn't have anything to do with other assets, liabilities, income, or expense. So that's cash balance. So then income statement. So getting to an income statement by fund in QuickBooks. What people do to compensate or to do this is they'll set up a class. And a class works for income and expenses, but that's about it. So what it does is it gets you to an income statement where you can say, show me all the money that I've received and spent for this particular class, and it gets you to an income statement, which is great. The downside is it does not include any transactions that would not normally show up on an income statement, like liabilities or other assets. So if you had grant money, and with that grant money you then purchased a fixed asset, you would not be able to track that with a class. Likewise, if you've, for some reason, if you're a church and you have a building fund, and you want to track that the building fund owns the building and the mortgage for the building, so you want to basically run that, I've got a balance sheet, I have $1 million building with a $500,000 note on it, And then when you pay the mortgage, you're then reducing the liability and increasing the interest income expense or interest expense account. None of that really works with a class because, again, you can't reduce liabilities on a class. It's just income and expense. So that's it. Another downside to that is there's no balance sheet because there's no other non-income or expense accounts in play. Kind of the last downside to this is there's no running balance. So if you were to say, how much money do I have set aside in my grant fund, using a class, you'd have to run the class report for all dates because maybe that spanned multiple years. You have to run it for all dates, and now you have to factor in were there any non-income or non-expense transactions that have occurred, ultimately to get you down to the cash balance, which you might already have set up as a workaround as a sub-account. So again, that's the income statement. Using classes, it can get you to income and expenses, but not an actual true fund accounting balance. Which, by the way, in Aplos, we have an equivalent feature to tags to classes called tags. So we've got that as well. So the last one here, we talked about cash balance, income statement, and then balance sheet. So ultimately, your funds need a balance sheet because you need to show, here are my assets to this fund, here are my liabilities to this fund, and then ultimately, what's my equity? At the end of the day, how much is this fund worth to me right now? And you can set up multiple bank accounts, you can set up classes, and even equity buckets. There's a lot of customers that we work with that come from QuickBooks where they've set up an equity account called unrestricted net assets, temporarily restricted net assets, and permanently restricted net assets. So they have their three kind of IRS, net asset classes set up as equity accounts in QuickBooks. So then at the end of the year, if you can get to it, you know how much money to adjust the equity up or down. The downside to this, well, plus side first. So the upside to this is it gets you to a separate equity balance, which, great. Separate equity balance. The downside is if that equity balance, call it, temporarily restricted net assets, is actually made up of multiple funds, then you've gotten a little bit more detail, but not quite, because temporarily restricted net assets, you might have $100,000 in that equity account, but that might be 5 to 10 different funds that you need to track. So you end up setting up a separate Excel spreadsheet to track, okay, well, this figure from QuickBooks is actually these 10 different things, and that's their fund balance. So not only do you now have a workaround and maybe even 2 or 3 workarounds in QuickBooks, you also now have this Excel spreadsheet that you're tracking as well, which makes things even more fun. So downside to setting up the equity buckets is it requires manual journal entries to keep the equity up to date. So not only is it's a manual entry, but also getting to the entry of what actually needs to be adjusted is going to be difficult as well because it's hard information to find. And if you have a large number of buckets, a large number of funds, large number of things that you're keeping track of, again, it might force you to have a separate Excel spreadsheet to keep that up to date. So people that use QuickBooks for nonprofit or fund accounting usually end up with a combination of the following. Multiple actual bank accounts. So at your Bank of America, you've now set up multiple accounts to keep the cash separate. You've got multiple assets in QuickBooks to track them. So now your chart of accounts is cluttered as well. You've got a lot of classes, of which, again, it's good for an income statement, but not good for getting a balance sheet or actual true fund balance at the end of the day. You might even have equity buckets that you've created to track kind of the division of the types of equity, but even then you might be losing some of the detail because you're not sure what funds are summing up to that. And then you might have some extra spreadsheets to keep track of in addition to all that. So that is how you would currently run a nonprofit in QuickBooks. They do have a nonprofit version, but that doesn't mean that it's not fund accounting. All they've done is kind of changed the name of some of the things. Like they've changed customers to individuals, I think, or something like that. Either way, it's not fund accounting. It's just word changing to be a little bit more familiar to nonprofits. So here's where Aplos comes into play. So they don't do fund accounting. They do business accounting. Great. If I ran a business, I would use QuickBooks. It's a fantastic software for businesses. But for nonprofits and churches, it just falls short in the realm of the fund accounting. So what Aplos does, is we require you to basically choose a fund with every transaction. So every transaction that you enter in Aplos is going to have an account, income, expense, liability, asset. You're also going to have a fund, which in our account is set up as an equity account. So you've got the account, so call it contributions income, and then the fund, general fund. So then we know that the general fund needs to increase in the checking account that you're keeping track of. So we know not only the fund balance, but we know the cash balance, and we know the income, and we know all the transactions associated with that. So on a more transactional basis, you're keeping the fund balances up to date in real time. And because we set each fund up as an equity account, you can easily at any time get to an income statement and a balance sheet and a transaction list and a budget and any other report that you need by fund. Fund accounting is just laced into everything that we do. So there's no workarounds, there's no extra spreadsheets, there's no support forums that you need to troll to go find out the right answer on how to do it. It's just simply designed to do that. So that's how we do it. So in Aplos, fund balances are up to date constantly. No adjusting entries are required. There's no outside spreadsheets that are required to keep everything straight. You've got a balance sheet, including a cash balance, income statement, and whatever other reports that you need available at any time. And again, because each transaction updates the fund balance, they're accurate in real time. And then kind of a bonus feature of Aplos is we also have been developing other nonprofit softwares like donor management. So not only do you have the accounting side of it kept up to date, so the QuickBooks side, you've also now got an integrated donor management platform. So if you need to track your donors and accounting, you can do both with Aplos. All right, so that's just kind of a very quick overall kind of skip a rock through the differences between QuickBooks and Aplos accounting. If you have any further questions, feel free to reach out to us. My name again is Alex. I'm the head of our services department, so you can reach me at Alex, A-L-E-X, at aplos.com or services@aplos.com. You can also reach out to our support team who can help with any of the software-related questions that you have. Their email is support@aplos.com, or you can call them at 1-888-274-1316. Thanks, and have a good one.